afternoon, everyone. Thank you for joining and welcome to a group session for corporate presentation of SINGHA Estate. Today we have the representative of the company, Mr. Chairat Siwaphornpan, Chief Financial Officer, and myself, Chantakan Janhorn, and Investor Relations of the company. Understand that there are a mix of new investors who may not familiar with our company, so I would like to start the session with a short brief on our company overview, and then Mr. Chairat will talk about the business performance and the company outlook to all of you guys. After that will be the discussion on financial performance and followed by the Q&A session. I will capture a bit on our portfolio. The company core operation is the property development in four main business: residential, commercial, hospitality, and industrial business, which allow us to maintain the optimal balance of revenue stream from both recurring and non-recurring income. The first pillar is development of residential business, both high-rise and low-rise projects. Each project is designed to match the needs and lifestyle of middle-tier to upper-tier market segments under different brands. We own four condominium projects, namely the S Asol, the S at Sing Complex, the S Sukhumvit 36, and the Explore, and one housing project, namely Santiburi Residences, which is a kind of ultra-luxury segment. Each unit is about 250 million baht. Total project value amounted to 23,834 million baht. For commercial property is one of the company core business that generate recurring income, offering a good return on investment and promising high growth potential. Currently, the company owns 5 commercial buildings, which include office and retail space for rent, namely Sun Tower, Sing Complex, the Lighthouse, Metropolis, and S Oasis. The total net leasable area is approximately 193,600 square meters when included to be completed S Oasis building in the second quarter next year. For the hospitality business, is operated by S Hotel and Resorts Public Company or SHR, another subsidiary company. Currently, SHR is a fast-growing company that engages in management of hotels and resorts and investment in international locations. SHR has a unique portfolio of property in desirable global tourism destinations. In 2021, SHR owned a total of 39 hotels with a total of 4,602 keys located in 5 countries, including the Republic of Maldives, Fiji, Mauritius, the United Kingdom, and Thailand, all of which are attracting diverse number of tourists worldwide. Most of our portfolio was represent leisure segment in upper mid-scale and upper upscale that will feel comfortable and confident for the strong business recovery. For the largest business that we just announced later this year, we call industrial estate and infrastructure business. Basically, we have the first asset at one industrial estate in Ang Thong province, which have 1,790 rights for total area. And on this industrial estate, we would have 3 combined cycle power plants, which can provide 400 megawatts of electricity and also steam to industrial users. So basically, this is the 4 pillars that we have and will be a key driver for SINGHA Estate performance. For the next session, may I hand over to Khun Chairat to brief on the operating performance. Khun Chairat, please.
Okay. Good afternoon, ladies and gentlemen. It's very challenging for me to talk to you after lunch time. So I will try to spend this 20 quality minutes to talk to you whatever behind the number to ensure that I deliver the message that you're supposed to know about our company. So about the highlight of the third quarter, I think although the actual performance of the third quarter is still not deliver what it should be, I think from what you visit to the other listed company, especially in the hospitality and property sectors, is it could be similar mood and tone, meaning that although the actual performance did not deliver, we saw the light at the end of the tunnel, especially for the hospitality sector. For the hotel business, even though some destinations still have limited number of tourists, we quite sure we have kind of certain outlook on the coming quarter that when of each destination the tourists will arrive again. Similar as our portfolio, the actual performance of the third quarter for the hotel is only UK and Crossroad that can perform at the moment. 90 to 95% of the performance for S hotels and resorts. The ticker is SHR, our own subsidiary, contribute for 95% of the whole performance for 2021. However, the rest of the destination, we saw the coming traffic throughout the coming quarter, which I will elaborate later. For the residential, our first ultra luxury hotel, by meaning of ultra luxury, is each unit we sold at least 200 million baht for 26 units at the center of Bangkok. We already sold it out. So meaning that we still have demand for sure, especially domestically for the detached house, which would be very good start for SINGHA Estate to develop our own, the next brand for the detached house in coming years. And for Sukhumvit S36, the ultra luxury condominium at the center of the Thong Lo, the transfer plan is still as planned for the third quarter. For commercial business, meaning the office building, even though a lot of question after COVID, what would the office world gonna be, we still can reach 95% occupancy, and above 90% of our tenants that have a lease expired this year is already renewed for another 3 years. So this is very pleasant performance for us for third quarter for SINGHA Estate. Next, please. For the project under development for residential, we really confident to move on the single detached house, especially for the luxury scale, meaning that we would develop for the project in the range of 10 million baht to 100 million baht for the next few years. And we start the first one already at Pathanakarn 32, and we expect to launch in next year, second quarter. And we also keep looking for another land plot, and we'll announce very soon for another 2 plots that we'll develop next year. For the hotel, after we acquire 26 hotels in UK in March, previously we hold 50%, and we just acquire another 50% from our partner in March this year. And we still keep optimizing on this portfolio. And as you may know, the third quarter would be a very solid performance for the UK hotels this year. And we hope this momentum going forward next year for sure. We also have our third development for Sofitel Seoul, the premium brand of Accor, the lifestyle brand in Maldives. This is our third hotel in Maldives, which we expect to open in 2023. And you will see later the Maldives hotel performance perform very well this year. For commercial building, we will have the brand new building start launch second quarter next year. It's called S Oasis. It's right at the center of North Bangkok, next to our existing building, Sun Towers, with 54,000 net leasable area added to our portfolio. And as Kun Thakar mentioned, we just enter into industrial estate business. Simple reason, we would like to diversify ourselves to not only the consumer product, but also the investment product as well. But to invest in this industrial estate, we not just put our egg into the one basket industrial estate. but into the power plant business as well. In Thailand, it's called small power producers, which means we can secure kind of the consistent cash flow generated from the power plant in attached to the industrial estate. We hold 30% of shares in power plant 400 megawatt combined capacity. The major developer would be Big Green Power for 70% of this power plant. We will elaborate later on this business model throughout the presentation. Next, please. So as I say, for the commercial business, overall of our three main buildings, Sun Tower, Sing Complex, and Metropolis, the office building, we expect to close nearly 90% throughout the end of the year for the occupancy. Even though a lot of challenge on renewing the lease to the tenant, our team worked so hard and can secure nearly 90% of the occupancy with remain the rate on the rent rate at this situation. That would be very impressive at the moment. The flagship building would be Sing Complex in the junction of Pebbury and Asok, right at the center of CBD area. We closed the occupancy at 94% in third quarter. The major tenant is both Bunrod Brewery, our own parent company, and also Shopee, the largest online platform, shopping online platform, the headquarter from Singapore and in Thailand as well. So we quite comfortable with our mix of tenant in this Sing Complex, and we closed 94% throughout the end of the year. The rest of the office building, we also can maintain above 80% for the occupancy, and all the anchor tenant of each building already confirmed on the renewal of the lease. So that is our principle to secure the anchor tenant to above 80% and yield the rate for the rest of occupancy throughout 90% or nearly 95% to lift up the average rent rate for the whole office building in each building. So that is our tactic. Since we have the first office building, Sun Towers, and we apply the same to our Sing Complex and Metropolis. So that is overall of commercial business. We don't see a lot of change throughout the next year. The only challenge for us next year is about the S Oasis that we're going to open in the second quarter 2022. How we fill in the tenant, we can present to you later on. Next, please. For residential, we have 3 high-rise condominium right at the center of CBD area. S Asok and S at Sing Complex is our first 2 luxury condominium in Bangkok. Right now, we sold above 90%, so we expect to close all of this occupancy within a year or 2. And the S at Sing Complex, the S at Sukhumvit 36, we joint venture with Hong Kong Land. And if you see the price per square meter, this is the super luxury condominium right at the center of the Thong Lo. We start transfer the last quarter last year 2020, and so far the transfer still as planned. Almost 50% is already transferred throughout the third quarter of this year, and we expect the rest of the transfer would be occur in 2 years or 3 years from now. So that is the plan for S at Sukhumvit 36. The Extro, the 4th condominium project of Sing Estate, would be located next to Rang Nam, next to King Power, at the in Bangkok area as well. So far, we have pre-sale 11%, and we hope the pre-sale would be enhanced if the international travel is unlocked next year. So this project is still under development, and we expect the first unit transfer occur in next 2 years. Next, please. This one, the Santi Buri, the residences, the ultra luxury 25 unit of detached house that I mentioned earlier. We already sold it out. We launched this project 3 years ago, and for the third quarter alone, we sold 9 units out of 25 units. That make us secure the whole 25 unit backlog for this project. We expect this model, we sell the land uh, at the first place, and then we also construct the house for our client as well. So the half of the revenue will come from the land transfer, which we expect the full plot of the land, meaning 20% of our backlog, 3,100 million baht, would be recognized throughout the last quarter of this year. And the remaining 10 plot, 40% of our backlog would be transferred next year, 2022. The rest of the backlog, 40%, is from construction revenue, which we would be recognized along the completion of the construction for the next 3 years, basically during 2022 to 2024. This project itself make us very confident to develop this kind of business model to our next detached house, luxury detached house, because we not only build a house, but we build a commodity for our client, for our tenant on the housing project, which we can tell you later what will be the concept of our next detached house. Next, please. For the hotel, as say for the first 9 months, UK and Maldives perform 95% of the whole portfolio. UK, actually the business is just pick up in third quarter this year. As you know, the government of UK start relaxing the restriction since July this year. And for third quarter, just a high season of domestic travel, which fit to our portfolio. In the past, above 90% of this portfolio is served for domestic demand. So for third quarter, not only we can achieve 10% ADR higher than 2019, but also the break even of net income start in August and September. So this is very promising recovery side for the UK hotels, because right now the leisure segment perform very well. People travel domestically, and also in the European country as well. They travel inside the continental. So that make the third quarter of this 25 UK hotels perform very well. And we also see the promising sign in the fourth quarter as well, especially during the Christmas time in December. If you can recall, December 2020 is during the lockdown period for the UK. So you can imagine how people want to go out during the coming Christmas. For Maldives, the Maldives government really used the right strategy in the second quarter. If someone can recall, when the India have serious COVID spread in June, the Maldives government decide to lock down the country from South Asia during the May to June, ban 7 countries in South Asia to travel to Maldives, and they start unlock this restriction in mid-July this year. That makes the third quarter of the tourism in Maldives recover again. That make us, for the average, the first 9 months of this year, occupancy of our 2 hotels in the project called Crossroad in Maldives, reaching almost 60% for the first 9 months of 2021. and we also see promising signal in the fourth quarter as well, especially throughout December. We can demand quite a high ADR, reaching the pre-COVID level already for our first two hotels in Maldives. So we are really confident on the performance in Maldives throughout the fourth quarter of this year and also the momentum toward the first quarter of next year as well. For the rest of the destination, I will elaborate on the outlook later on. Thailand and Fiji, pretty similar situation. It depends on international tourists, to be frank. The fourth quarter, pretty much we still need to focus on the domestic demand, which is not bad. At least we can reach the EBITDA break even for Thailand hotels, just like the last year. We really confident on the Phuket and PP destination, on par on the Samui destination, which expect to recovery later. So for PP and Phuket, we hope the fourth quarter can reach the EBITDA break even, and for next year, we saw the sign of international tourists come back in Thailand, start from Phuket and PP first, and the first quarter of next year supposed to be a good sign for these two hotels. Similar as Fiji is really rely on Australia and New Zealand market more than 85%, and Fiji government start to unlock the restriction in December, and we never saw this kind of V-shaped recovery before. In the month of January, our hotel in Castaway reaching 70% pre-booking for the Fiji hotel already. So this is never happened in January in Fiji before, because January is normally a low season, but it happens already. So we can see how much people want to travel. As well as Mauritius. Mauritius government start open the country in October. And since the month of the ease of the restriction, the occupancy reaching 40%, similar pattern at Maldives, reaching 40% during the first 2 months and 60% and 80% later on. That could be happen in Mauritius as well, because the main guest in Mauritius is the people from UK and France, and the European people, they start traveling. Unlike Asia, we still have a lot of conscious on traveling. In Mauritius, however, people start traveling, and we saw the demand pick up right away after the first month of releasing the restriction, 40% in October. So that is kind of the outlook that we would like to lay out at the moment. We will have the more detail in the later slide. So as I recap earlier before, for the UK, next year we expect a really good year for the UK hotel. Even though the business segment seem to be slow recovery at the moment, our 25 hotels in UK located in the regional country, not in London, and mostly rely on the leisure segment. So we expect really good performance for the RevPAR of our 25 hotels next year. Similar as the view from the professional in the UK as well, the regional hotel expect to recover faster than the London hotels. That is not the secret in the UK. Maldives, as say earlier, 2022, we expect the RevPAR is at a similar level of pre-COVID, or even beat the pre-COVID level, with the simple reason our hotel is just 50 minutes from the international airport. And as you may already know that the domestic travel or the seaplane in Maldives still not perform the full function. So people always have a choice for the hotels nearby the international airport. So our crossroad project, 50 minutes from the airport, 2 hotels in there, Sai Lagoon Maldives and Hard Rock Hotel Maldives, expect very solid occupancy, 70% for next year. That is our expectation. And the ADR, of course, will be trade above the pre-COVID level. That is our expectation next year. For Thailand, I already touched it up a little bit. We expect the Phuket location and nearby, meaning PP hotels, pick up earlier. And if we can see the pattern of the Maldives, we expect the similar shape of recovery for Thailand tourism as well for next year. So Thailand, Phuket and PP, we expect about 60% of occupancy throughout the whole year. Similar as Mauritius, we saw 40% occupancy, 60% on the following month, and reaching 80% throughout the end of the year. So in Mauritius, the high season is actually in third quarter and fourth quarter of every year. So next year, we hope some momentum still carry on the first quarter, but very solid performance in the second half of 2022. That is our expectation. For Fiji, as I mentioned a little bit, the government start open the country in December, solid performance in January 2022, and reaching the high season of the travel in second quarter and third quarter 2022. We expect above 80% of the occupancy throughout the high season. The whole year could be around 60% for Fiji. So that is our outlook for the hotel. For residential, as I touched up earlier, next year SINGHA Estate will have the next brand for the single detached house. We already developed the ultra luxury scale for the people who want to buy a house more than 200 million baht. So we quite certain that we have the pipeline, the people in line to looking for the housing at the 10 million to 100 million, because we know how to develop the concept, the community for this kind of luxury scale. So we expect to open at least 3 projects next year. Commercial, as I say, we very focused on S Oasis, the brand new building that would open in second quarter next year. Throughout the end of the year, we expect the occupancy will be around 40% to 60% for S Oasis. So that is our outlook for commercial. Next, please. Okay, so I hand over to Kun Jantakan for financial performance, and we can come back for the Q&A later on.
In the third quarter result, the company report total revenue of 2,127 million baht, increased by 60% year-on-year, with 748 million baht of gross profit, improved both Q-on-Q and year-on-year, mainly due to the performance recovery of UK and Maldives portfolios. The below chart show you the revenue and gross profit breakdown by business for the 9-month period. We report an increase in total revenue by 5% on the back of strong performance of UK portfolio and the revenue contribution from Santiburi Residence, which could fully compensate the deconsolidating of NVD from the company financial statement. However, gross profit reported at 1,500 million baht, declined by 16% from the same period last year, mainly derived from a decline in revenue from residential business. In 2020, the company realized the revenue from the S Asol and the S at Singh Complex for almost half of the revenue from residential business. Those 2 projects normally provide a higher margin, while this year over 60% of revenue from residential business was represent revenue from Santiburi Residences, and the landed property itself would provide the lower margin in general. Accordingly, gross profit margin dropped to 29% from 36% for the same period last year. If you look into the 9-month results, the company recorded net loss of 238 million baht, incur a significant lower loss from last year thanks to the strictly loss containment. We can trim selling and admin expense by 18% despite the business resumption, as well as we realized share of gain from investment in joint venture in an amount of 196 million baht from the performance of the S Sukhumvit during the period. In terms of balance sheet, as of September this year, the financial position was presented by the consolidating NVD asset and liability while consolidating UK portfolio into the company financial statement. Consequently, the company report total assets of 66,985 million baht or increased by 3% from last year. Total liability also went up by 8% due mainly to the additional borrowing from UK portfolio acquisition transaction. Interest-bearing debt also increased from last year, push up gearing ratio to 1.15 times, but still well below the company covenant and considered as the well suited to the environment situation. Thank you.